Welcome to the Jill on Money Show. It's Sunday, October 20th. And today, part 2, we're going to give you a little snippet of our webinar that was focused on real estate. We had a realtor, Tim Mullett, a mortgage broker named Mike Ramey, join us for the webinar. And they both started to talk about something I had never really thought about, and that is the impact of the looming election on the real estate market. Listen up. Both candidates have flagged housing as an important issue. And so, Tim, how do you think this election, that it's, we're now weeks away, how is it impacting your world?
Yeah, it's a really good question. It's kind of the water cooler talk right now, because I think in a lot of markets, we oftentimes will have a spring market, and then at least in Chicago, the summer dies down. Usually right after Labor Day, we get a small window of a fall market, and we're not seeing it this year. And the rates have come down. You think that would maybe get some people off the fence. But what we're thinking a lot of times, presidential election years, a lot of people kind of hit the pause button. They just want to kind of wait and see what happens before they make probably the biggest investment of their life, right? So not that the outcome will necessarily change their mind, whether they buy or don't buy.
So it's a bit of a wait and see, uncertainty.
I think so.
Yeah. Okay.
I think it's part of it because, with the rates coming down and we're in the fall market, I don't really know what else.
Doesn't make sense otherwise, right?
Yeah.
And Jill, you think it's silly? To me, that's like when we get people who call our show and say, well, I'm scared to invest because of the election.
Yeah, I think it's ridiculous because I think this, like you said, it's such a huge purchase. And like actually what would impact the housing market is going to take so long to work through. It's so dumb. So don't try to time the market. Don't try to time the mortgage market for sure. Yeah. And again, if you run the numbers, this will work. It will work for you.
Jill, my buyers right now, if I could find them something, I would highly encourage them to jump on it, because I've written a couple offers in the last couple weeks that I didn't give away the world. I actually negotiated, which felt right. It felt weird. I was like, wow, I'm actually negotiating again here. I'm not buying as is and waiving this and doing that. Right. It's so, some properties that 2 months ago, I would have said would have had 10, 15 offers on them by the end of the weekend. It's not happening right now, right? So it's not really adding up. So that's why we're kind of maybe the election has something to do with it, just the climate, right?
Mike, you think you agree with that, Mike?
Yeah, I agree. It's silly. I think it's, put everything aside and focus on finding a house that you like, regardless of what else is going on. So I totally agree with that. But Tim, I agree. I think that, people have a level of uncertainty and they want clarity. And they feel that maybe things are going to change depending on who was elected. I don't know. I don't think so necessarily, but I think that's some of the mentality of people. And listen, that's completely without any kind of, study background. I'm just kind of speculating like Tim is.
We're happy with anecdotal. We're very happy with that.
But I agree. There's some level of uncertainty. And I think, we'll have some clarity after November 5th, or hopefully it's November 5th and that doesn't drag on. But we'll see what happens.
So just out of curiosity, let's say that I own my house in Chicago and I have a 3% note, Tim, and I want to go out and buy another house. I'm going to move up. Are you finding that people are like, I love this low mortgage interest rate and I'm going to be a landlord? And is that something that you're seeing more frequently? Because we're hearing about that from our audience a lot more.
It's definitely a more regular conversation where people that may have been like, I will never be a landlord. They're like, you know what, maybe, and I'm a landlord, so I can talk very openly about it and give them my 2 cents. I always tell them it's not for everybody. But if you're just renting out one condo in a condo building, it's kind of low risk, low maintenance for the most part, right? Especially if you're local. So yeah, definitely people are having those conversations, just building their real estate portfolio. And if the numbers make sense and the rent that they can get from that investment property covers their expenses and their mortgage and everything, and the rental market's strong, at least here, it can definitely make sense.
Mike, if Mark and his wife had decided to hold on to their apartment instead of sell it, and they have a rental agreement, will lenders include, again, it's brand new, so I have no track record, will they include income on an existing property that does not show up on your tax returns yet, or will they not?
They will. So it's considered an exit home. So if you're moving out of your current primary, buying a new one and renting out your current one, as long as you have a lease agreement, you also need proof of a security deposit, then we can use that income to offset the mortgage payment. Or if there's no mortgage payment, use that income simply to help qualify.
If you want to hear this whole webinar, you'll need to join Jill on Money Live. That's where you have access to quarterly live webinars and the back catalog like this one, bonus content, all for $35. It's all on our website at jillonmoney.com. You can subscribe to Jill on Money on the Odyssey app or wherever you find your favorite podcasts. And of course, do something nice for someone else today. Change your work, change your wealth, change your life. Thanks for listening. We'll talk to you tomorrow.